In this video, I'll be breaking down my £16,000 portfolio on Trading 212. So this February has been quite red and I've done a lot of dip buying, but there is only so much I can buy. I'll be showing my buys for the month, the dividends I have received, as well as my overall progress so far for this year. So I am the Brummy Bull investor and I want to show that financial freedom can be achieved by investing on a normal wage. If you don't want to miss out on any future videos, hit the subscribe button, and with all that being said, let's get into the video. So heading over to my Trading 212 account to see how my progress has been for the month of February. So my current portfolio value is sitting about £15,650, and since the start of the year I am down just under £1,000, which is about 6% rate of return to the negative. So I'm down, and this is largely because of the SaaS sell-off, also known as the SaaS apocalypse, as well as Trump finally attacking Iran. I think the markets are in quite a confused state right now as it doesn't know what is happening, and also historically February isn't the best. My performance has been okay since the start of the year. I was up quite a bit, and this is largely because of the high beta stocks, but since then it has been down. These big jump ups is where I've been putting in money. I spent quite a bit of money trying to take advantage of the dips, but there's only so much dip buying I can do until it's just a falling knife. So in this last month, I am down about just under 5%, which is about £800. And today I am down nearly £200. The market's finally opened and I wanted to see if it was up or down because of the tax on Iran. So having a look into my individual holdings, the first being my S&P 500 ETF, which is sitting about £2,870, which is about 7% into the green, just under £200. I buy into this every single time I get paid from work, which is about £200. As you can see, steady growth. I'm not expecting large moves from this, I just want this to be growing over time. Next up is Google. It is down about 10% for this month. Again, a company where it's a very strong company. Everybody knows and uses Google. This time last year, there was a very strong narrative that Google was dying, that search was over. But they have shown time and time again how strong they are of a company with Gemini, with all the other bets like Waymo and the TPUs. A company which I want to hold for the long term, as I can see it being around for a very, very long time. Next up, we have Nvidia, which is down about 9% in this last month. They did report earnings just this week and they've gone down. They were good earnings and it's really made me think about buying more into this company. I think they trade about 22 times forward earnings, and if they do drop around that $170 this week, I will be putting more money in. I can see this or Amazon being one of the first to $10 trillion, and that's not a small milestone, that's a big thing, especially for this company, Nvidia, which is powering the next generation of AI. Speaking of Amazon, it is down 16%. Since its earnings, it has dropped down quite a lot. I do think at these prices it is very undervalued. I am down 6% and I've been buying quite a bit of it and I might be putting more money into it. As you can see, my largest holdings are basically all Mag 7s because they are the best and strongest fundamentally. Next up we have Meta, again another company which I've been buying into. They did have strong earnings and they're down about 5%. I'm currently flat on this position, and because I'm at my average I might be putting more money into this, but my eye is currently on Nvidia. Rolls-Royce did report this week and they are up about 9% this last month and 23% in the last 3 months. I think they're up because they are defensive stock and industrial stock. These wars are quite beneficial for them, which isn't one of the best things when you really think about it. But Rolls-Royce is a strong company. I'm not gone through the earnings properly yet, and I want to see if it is worth being putting more money into this. I wish my position was bigger, as it's a nice company and it's nice to hold these UK stocks. So next up is Nebius. Not the best month. I'm down about 13% for this last month, but this company is a high beta and it loves to jump up and down. It's tempting to sell at the highs and buy back into the lows, but you never know what's going to happen. And being in it for the long term, I don't mind accumulating more shares. Now, Nebius is one of my favorites, especially when it comes to data centers, because AI needs data centers, and Nebius is one of the best as it's diversified across so many different sectors, especially when you compare it to Iron and CoreWeave. It's a company I will definitely be holding on to for the future, as they still seem very undervalued, with average price targets easily above $150, closer to 200. Next up we have Grab. This is probably one of my favorites when it comes to a growth company. It's not been the best month, down 9% and again down 25% in the last 3 months. But this is a company which has such a strong market in Southeast Asia. I don't expect this to jump to $10 by the end of the year. I expect slow, steady growth, especially with the market and the moat they have in Southeast Asia. I can see this growing over time and becoming a very big player. Next up, we have ASML, a very flat month. But if we look at this from all time, I bought in when people were thinking that it's just a typical company. People didn't realize how much of a monopoly this company is. No company comes close to ASML as they make lithography machines that no other company can do. This is a very strong company. There's a video on how unique they are. I don't think anything will touch this anytime soon. Next we have Visa, down 3% this month, but again if we zoom out, this is a long-term play. They're dividend growth stocks. I don't mind accumulating more shares at these prices. It's a strong company and I don't mind holding it for the long term. Next we have Robinhood, not the best month, we're down about 30% and this is largely due to the Bitcoin, they're quite closely related. They did also report earnings which were okay and I've been sitting on this company for some time now. It reached 150 is not a long time ago, which is about 250% rate of return. I'm tempted to buy more into this position. I last bought in about a year ago, and this is a very strong company. I don't mind holding this for the next 5 years as I can see this reaching $500. I really trust in the CEO, and he does constantly put up good growth. Company which has been quite tough in this last year is Novo Nordisk. Looking at the whole chart, as you can see, a big massive spike, and now it's at all-time lows. Now, this is a company that has to compete with Eli Lilly, but they produce obesity drugs like Wegovy, and the obesity market is looking to grow exponentially over the next couple of years. I don't think it's healthy, but I can't see this company going away. As long as they don't keep missing on the drug trials, I can see this being a good flip, as this seems quite undervalued at current prices. Next up, we have Greg's. Not much of a move, down about 5%, but again, the whole market is down. Same with Nike, down 2%. As you know, these high beta names go down, these cyclical names typically go up. So you can see a lot of the up and down spikes. I don't mind holding on to these for the long term. Hopefully the World Cup does well and this is able to return to the $70-$80 range and I might look to sell out. Zeta Global down 20%. Again, it's a new position I started recently. This is a very strong company, a company I really believe in. They have beaten for the last 18 quarters now, I think, and raised guidance. A company which I'm hoping to see $30 for the end of the year. That is if the markets do pick up. Next up, Vici. Again, up 8%. This is because the high beta is down. This is a strong yield position. I don't mind holding it and collecting the dividend. Company which is a very large dividend yield, which is about 15%, is B&M. Hopefully this will recover and I will look to sell out when I break even or maybe into some of the profit. Then the next company is UK Wind. I'm looking to sell out of BM&R. Hopefully they do flip back up. I'm down £200, which is quite chunky. Rocket Lab is a new position I started. This along with ASTS I'm holding on to until the SpaceX IPO, hoping to make some good profit. And then SoFi is another company where I bought in within this $10 range and I sold at about 20. I bought back in now because it's quite undervalued. So this is a summary of all my holdings and the performance for this last month. Having a look at the heat map for today, the markets have opened quite red and this is largely because of the Iran war. Hopefully we will reach the bottom soon and that March will be a strong month and we'll be able to move upwards because in this last year it's not been the best. It's been a lot of up and down, especially since November. Things go up, things go down, and each time there's been a dip, I've been buying it, but it's just nicer to see green. So we can hand over to my dividend portfolio tracker to see my holdings and the dividends I've received in this last month. So this year I've made about £14. I've received £89, just under £90 in total. And in February I received 72 pence from ASML and £6.50 from UK Wind. So this takes my total for this month up to £7.20. Hopefully this will continue to grow year over year and I will hopefully see about £100 of dividends for this year. I did only start last March, so I'm hoping for good growth from last year compared to this year. I'm hoping about £10 and I think this March will be a strong month. Heading over to my investment dashboard, this tracks all my current investments. As you can see, my stock value is just under £16,000. This is my current profit with my current percentage. Crypto has been down, gold has been up. Decent growth, and as you can see, my portfolio value over time has been growing. So some ups and some downs, but as you can see, it is still following this trend line. My current holdings are mostly diversified within stocks. My dividend yield is about 1.5%, and then this is my current makeup of my holdings of my individual stocks and then my sectors as well. Overall, it's been an okay month. I've been putting a lot of money in, trying to take advantage of these dips, but there's only so many dips that I can take advantage of. Whatever happens, I'm in this for the long term. So any big dips, any large rises, I'm just gonna take an average and continue to grow up and go. So we can now have a look into my buys and sells in the month of February on Trading 212. So first up was my S&P 500 ETF buy into VUSA. I bought 1.54 shares, which cost me £150. Now every single time I get paid from work, I usually buy into this, and this is a recurring payment. My new position size sits just under £2,900, which is about 30 shares and an average of about £90. Next up is Meta, stock ticker META. I bought 0.65 shares, which cost me just over £300. This takes my new position to £860, which is 1.8 shares and a decent average. Next up is Amazon, stock ticker AMZN. I bought 2.3 shares, taking advantage of the dip from their earnings. This cost me £340 and taking my new position to just over £1,240. This is now a total of 8 shares and an average of about $216, which is still above the current prices. Next up is Rocket Lab, stock ticker RKLB. This is a new position and I bought 3.5 shares and it cost me about £184. The position is now worth £180, which is a slight dip, and this is taking advantage of the upcoming SpaceX IPO. Next up is Nebius, stock ticker NBIS. I bought 2.4 shares, costing me £141. This takes my new position to £673, which is 10 shares, and an average of about $80. Next up, we have SoFi, stock ticker SOFI. Again, a new position I recently started. I bought 8 shares, costing me £123, taking my new position to £157, which is 12 shares in total. Next up, we have Zeta Global, stock ticker ZETA. I started this position in January and I bought some more for this month. I bought £145 worth, which is 12 shares, taking my new position to just under £500, which is 40 shares. And then finally, we have Novo Nordisk, stock ticker NVO. I bought 4 shares, again taking advantage of the big dip, taking my new position to £527, which is 19 shares. So overall for the month of February in 2026, I spent £1,518 and I haven't sold out of any positions as again I'm in this for the long term, so selling is quite rare, especially at this age. I received £7.20 in dividends, so my total net expenditure for February is £1,511. Again, a lot of money spent for this month, but I'm trying to take advantage of these dips. It's important to realize when there's a dip and when there's a falling knife. But again, if you're in this for the long term, these prices are definitely nice, especially in strong companies like Meta, Amazon, and my S&P 500 ETF. So thank you for watching the video. Remember to like, subscribe, and leave a comment below as it really helps out the channel. I'll be documenting my whole investing journey here on YouTube, so make sure you don't miss out on any future videos.